With the last 2 years being a wild ride of illnesses, economic distress, stimulus checks, and global shutdowns, there's been a lot of talk about the death of the US dollar. With inflation on the rise, people are looking for alternative places other than the stock market to invest their money. Here, we'll take a look at the history of the US dollar, the role of inflation, and alternative investments like cryptocurrency that can potentially offer a hedge against the falling value of the US dollar. We'll get into the full list in a bit, but if you are interested in getting started investing in cryptocurrency, check out Arculus using the link below. Arculus is the safer, simpler, smarter crypto cold storage solution offering the most advanced security with the simplest management tools. Take your crypto storage to the next level and protect your investments from threats like hackers and identity thieves. Arculus is made up of two parts that work together: a physical Arculus keycard and the mobile Arculus wallet app. The Arculus keycard doesn't use any cables or USB connections and never runs out of power. There are no outside connections to your Arculus keycard. The Arculus keycard and Arculus wallet mobile app work together as a three-factor authentication security that protects each customer's personal keys to their crypto. The Arculus wallet app leverages the security systems on mobile devices like fingerprint or facial recognition. It requires a 6-digit personal PIN, and the Arculus keycard contains an embedded secure element that holds your encrypted keys and must be physically near the mobile device to enable transactions. The wallet app is easy to use and lets you buy, swap, and send the world's leading cryptocurrencies in seconds. From the app dashboard, you can manage all of your cryptocurrencies in one secure place, easily toggle between currencies to seamlessly manage your portfolio, and review your transaction history in real time to see all of your previous transactions. It takes just a few minutes to sign up for Arculus, so if you are interested in getting started investing in crypto, do check out that link in the description so that they know we sent you. Believe it or not, the dollar wasn't always how it is today. For a time, we operated with a currency that was backed by the value of gold, and the US government's budget didn't always run on a deficit. The gold standard was a monetary standard where a basic unit of currency, or the value of the dollar, was determined by a certain quantity of gold. When the US dollar was on the gold standard, each dollar was worth somewhere between 0.6 and 1.5 grams of gold. So why isn't the US dollar still worth a fixed amount of gold today? Well, the gold standard posed a problem for the government. They weren't able to print endless amounts of money if they didn't actually have the gold to back it up. In times of war and economic crisis, the government was monetarily limited in the amount of expansion they could do and the help that they could provide. So in 1933, President Roosevelt took the US off of the gold standard. With the Gold Reserve Act, people were forced to exchange their gold for paper money at a fixed price. But eventually, the dollar was put back on the gold standard. However, President Nixon changed that. With inflation already on the rise, in 1971, he announced that the US would no longer redeem dollars held by foreign governments for gold. This was supposed to be temporary, but it wasn't. The US never went back to the gold standard. The inflation crisis of the 1970s was largely over by the 1980s. However, another one was looming. By the end of 1981, the US public debt crossed $1 trillion for the first time. Many economists warned that the public debt had become unsustainable. Since then, the US public debt has continued to explode in size. As of the end of December 2021, the US public debt sits at $29 trillion. And as more and more money continues to be pumped into the US economy, the purchasing power of the dollar continues to fall. So Nixon closing the gold window essentially turned the US dollar into a fiat currency. Fiat money is a government-issued currency that is not backed by a physical commodity like gold or silver, but rather by the government that issued it. Fiat currencies have an average lifespan of about 27 years, and since the US dollar has been a fiat currency since 1971, that means it's in its 52nd year as a fiat currency. Even though it's been around for a long time, that doesn't mean it's doomed to suddenly fail. The British pound is 300 325 years old and still going strong. So if the age of a fiat currency doesn't cause it to fail, what does? Usually, inflation is one of the leading causes. Inflation slowly decreases the purchasing power of our money over time, or in other words, 50 years ago, you could have bought a lot more with $100 than what you could purchase with the same amount today. Stories about inflation are usually accompanied by images of people pushing wheelbarrows of money in Zimbabwe or 1920s Germany, and while these are obvious examples of hyperinflation, what actually makes inflation so scary is that it's often a gradual slide. The effects may not be as obvious as people pushing around literal wheelbarrows of cash to buy bread, but the effects of inflation often look more like these three things. First, basic necessities become more unaffordable. In the US, we still have relatively affordable goods. Basic foods like milk, eggs, and bread can be bought by most people regardless of their pay. However, when inflation hits, the price of everything goes up, even those basic necessities. Again, this is generally a slow increase. You probably aren't going to walk into the store one day and see the price of milk go up by $10. But each time you go in, you may notice that it has gone up by a few cents until eventually it's gone up $1 or $2 from where it originally was. That is the gradual slide of inflation. And unfortunately, as the prices of basic goods go up, people's pay usually does not go up accordingly. For those already struggling to make ends meet, the rise in food prices can literally take food off of their table. But it's not just the price of food and consumer goods that goes up, the cost of borrowing money goes up as well. In other words, interest rates go up. When interest rates rise, it becomes more expensive for people to get a mortgage or any other type of loan. If interest rates go up just 1% or 2%, it can price a lot of people out from owning a home at all. Historically, a rise in interest rates has also tended to negatively affect stock prices, cause rent increases, and really just creates a domino effect that ripples throughout the economy. As the price of food goes up, interest rates rise, and the stock market falls. If these changes are drastic and they happen all at the same time, what we've seen throughout history is that people begin to lose confidence in their country's currency. In extreme cases of inflation, foreign businesses and countries may start to refuse to accept an inflated currency as payment for goods and services. When this happens quickly, this could lead to hyperinflation and a quick collapse of the economy. Enter the images of wheelbarrows. Once a currency goes into that hyperinflation spiral, the confidence in that currency tends to go down by the people who use it the most. So because of the inflation that people are currently seeing and or anticipating, we're also seeing a lot of people looking for places other than the stock market or other than a bank account or under their mattress to put their money in order to preserve their purchasing power. So let's take a look at some of the popular places that people are choosing to put their money other than the stock market. First would be cryptocurrency. Over the past decade, and especially in the last couple of years, a lot of people have been turning to crypto investments in order to diversify outside of their regular stocks or retirement accounts. And some people have been using crypto as a sort of hedge against the US dollar and inflation. In fact, the entire cryptocurrency market has risen from virtually nothing in 2010 to around a $2 or $2.5 trillion market cap in just 12 years. A couple of the most popular cryptocurrencies are Bitcoin and Ethereum, but there are lots of others as well, and if you download an app like Arculus to use as your crypto wallet, you can look through all of the options they have there for cryptocurrencies because they do offer a lot more than just those two. But in addition to cryptocurrencies, a lot of people are turning to other blockchain-based assets as well. For example, NFTs are becoming a multi-billion-dollar market, with some individual NFTs being sold for millions of dollars just in the last year. Now, the second thing is something that your grandparents or parents may be more familiar with as far as hedging against the US dollar, and that would be precious metals like gold and silver. For thousands of years, gold and silver and other precious metals have been used as an alternative storage of wealth, and while precious metals may have not necessarily outperformed stocks in the past decade, they have always been a popular alternative investment, especially during times of major inflation or economic crisis. If we see a continued fall in the value of the US dollar, we could see a spike in the popularity of precious metals again. We'll just have to see. But a third option that isn't talked about quite as much as crypto or precious metals would actually be investing in startups. While it's true that many small businesses struggle during times of major inflation and economic turmoil, there are always going to be certain industries that thrive during these times. So investing in startups or small businesses is another way to potentially make some returns when other areas of your investments, like stocks, may be struggling. Fourth is real estate. When a currency is in trouble or when people are perceiving it that way, a lot of people will look to put their money into assets that will hold value and can potentially offer cash flow. For many people, real estate ends up being a good option if they have that initial money to get started in it, and people invest in anything from single-family homes to commercial real estate to farmland. Real estate tends to hold its value and appreciate over time, and it can offer some opportunities to actually produce more cash flow by renting it out or actually using the land. While higher interest rates during times of inflation can deter people from purchasing homes, wealthier buyers may start acquiring real estate through all-cash deals that allow them to avoid paying those high interest rates altogether. And fifth, collectibles are another option that people use to flee a falling dollar. Collectibles are items that are rare or limited in supply that tend to appreciate over time. And a lot of times these can kind of be fun, nostalgic things like Pokemon cards more recently that have regained popularity and that a lot of people want to have as an alternative investment. Some other examples of collectibles that people purchase are things like artwork, rare cars, stamps, jewelry, or anything else that could potentially rise in value over time. While people have been talking about the death of the US dollar for well over 50 years, and it's often just used as a fear-mongering headline, it's really just important to be aware of the signs and the potential effects of inflation and to potentially look into some alternative investments if those are things that you are interested in order to hedge against the US dollar. To start diversifying and investing in cryptocurrency, do check out that Arculus link in the description. You can sign up in just a few minutes and get your cold storage Arculus keycard. And I will see you guys in the next one.